But I think, Nigel, it's all about chemicals now and how this sector is going to cope with those tariffs.
Well, that's right. Let's shift focus to the chemicals sector. Then BNK, they believe that tariffs lower than China is positive for Indian chemical companies. Dam Capital, they expect tariffs should significantly improve competitiveness of Indian players with regard to the Chinese competitors. Well, to help us out with some perspective, we're joined by Rajan Venkatesh, the Managing Director and CEO at Laxmi Organic Industries, as well as Sunil Chari, who is the co-founder as well as Managing Director at Rossari Biotech. Hi, gentlemen. Thanks a lot for joining in. Rajan, coming across to you first. You all have some exposure to the United States. If I'm not mistaken, it's around 20 to around 30% or thereabouts. So tell us, what is your take? Now we have tariffs that are imposed both on India as well as on China.
I hope you can hear me. I'm walking to the airports here. So just call out if you cannot. I think
we can hear you fairly well, sir.
From my side.
Yeah.
I hope you can hear me.
Yes. Yes. Please go ahead.
Yeah. So I think a lot of your guests have been speaking about is certainly things are evolving as we speak. We all wish we can get more granular, but that's not yet the case. So that's point number one. The second lens is there will be repercussions on the inflationary pressures as a result, because certainly U.S. is not producing the entire range of chemicals or chemistries, and hence, if you're putting in tariffs, this will have certain implication on the finished good pricing for the U.S. consumer. The third lens is obviously coming closer to home for Laxmi. We have about a 10% exposure of our business into the U.S. particularly. So that's where we are from that lens.
Oh, so Rajan, you mentioned that your exposure to the U.S. is just about 10%, is it?
Yes, at an enterprise level, yes.
Okay. So what do you see, as next steps for yourself? I mean, and that would be, I think, how a lot of industry players will be thinking. Right now, what we know is that the tariff is 26%. So unless it's negotiated down further, will you be able to pass all of this on to your end customers, the U.S. buyers? What happens? Will you have to take a bit of a margin hit? How do you see life changing for you come April 9th?
So I would say first is we are in deep in conversation with some of our key accounts that we are serving in North America and the U.S. particularly. So I think still, as I said, things are evolving. It's difficult to pin down. But you need to understand also the product portfolio that we serve that market is our specialty products, which are in sense unique in their performance, but in the total cost of formulation, a very small part. So that's how we view it, and we will see how things pan out. Let's also not, at this point of time, we need to understand what are the other measures other countries. For example, Taiwan has decided to support its industries that are impacted. We are seeing other countries also taking these measures. So we will need to see how all of that is evolving at this point of time.
Okay, all right. Let's get in Mr. Sunil Chari as well, the co-founder and managing director of Rossari Biotech, into the discussion. Hi, Mr. Chari. Good morning. Good to see you in. Tell us, what is your take? India getting taxed, but maybe not as much as China. Does it throw up a big opportunity for India and Indian companies like yours?
Yeah, I think there is a silver lining to the dark clouds, and we at Rossari are seeing, what molecules to focus. Our competition for the non-ethoxylate range was basically with China, and China also was routing some products through Vietnam and Thailand. And now all the three countries have, tariffs higher than India. We see opportunity to increase our exports to US. We don't see any threat to what we were doing already in the US.
So currently, what is your exposure to the US, and what kind of an opportunity could it throw up?
So for us, our total sales, out of the total sales, we have about 2% sales to US, but we have a bigger sales to LATAM. And there is no, I don't think there is change in LATAM. There is a lot of specialty chemicals which we make also made in US, and they may increase the prices. So for us, I think things are better with the higher tariffs than it was previously.
Okay, sir, so, could you just tell us, would you be, or are you already considering, I know it's early days, but if this remains, and that number can vary, like I said, it's 26% today, a couple of percentage points up or down, but Mr. Chari, are you thinking of any kind of realignments to either, take advantage of the opportunities that are opened up from China? Because with China, the war is really escalating. Do you foresee any change in supply chains? And at a company level, are you already thinking of making some changes to align with that?
So we were talking to some of our accounts yesterday. So we set up calls yesterday, and everybody is more bullish on India than China. In the specialty chemical sector, we are there, and everybody expects that exports from India will increase. I saw some reports where they say we will have a $7 billion hit from export from India, but I don't think so. In the specialty chemicals, all my peers should have, and us, Rossari, should have better opportunities in the chemical industry.
Okay, all right. Mr. Chari, just to complete the point, how is demand on the whole? In Q3, there was some softness, right, in the international market. Has that bounced back right now?
No, we have had higher, very, very good sales. And of all the chemical industries in India, we have been particularly growing rather than degrowing. And even our profits have grown if you see the first 3 quarters. And I see for the coming year also, a double-digit growth happening in Rossari.
So the international market is doing well, but in the domestic market, is there still softness?
No, domestic market, the last quarter, I think we saw a better demand than in the previous 3 quarters. FMCG companies are, demands are increasing for the accounts we have.
So good times for you then, both the domestic as well as international business, you're seeing good amount of demand. I think earlier you were guiding that in this year, you'll grow by 12 to 13%. Are you sticking to that?
Yes, definitely sticking to that.
And on this sort of a base, FY26, what does it hold? If demand's coming back, both on the domestic and international front, should spell better times?
Because the world is VUCA, it's still very uncertain, and I don't know what it is, but I would stick to the 10-12% guidance for this year also.
So for next year as well, right? You're saying even FY26.
The coming financial year.
Actually, we're already in it. I know. The current financial year. I know it's still kind of hazy in the head because 2nd of April became such a huge day, right? But FY26, 10 to 12% growth. Let me ask the same question to Rajan as well. Rajan, things are moving quick and fast, but all things put together in terms of growth and margins, what do you see ahead for the company?
So if you see the first 3 quarters of FY25, we've delivered profitable volume growth. And we remain on target to deliver that for the full year of FY25 too. Certain of our CapExes, especially the big one at the Dahej, is taking shape and is coming online in the second half of the FY26. So we are taking the steady steps. We have clear right to win in certain of our technologies, and that is keeping us in a good space in what continues to be, like what Mr. Chari said, a VUCA world, and we are navigating this very diligently.
All right, gentlemen, we'll leave it on that note. Thank you very much for joining in and giving us some perspective on how Indian chemical players and companies are gearing up to take on the tariff onslaught and maybe even some of the opportunities that are arising because of it.